Well, I think it's high time I finally get back to talking about financial news, something that I used to do quite frequently, but with all the riots and things going on over the last couple months, I've kind of shifted focus to that because I thought that was a much more immediate concern. But I can't go this long without talking about the markets, especially with so much going on. Of course, the big thing in the news today is the Kodak news, and how Kodak's up, what's it, like 600% today, up 200% yesterday. I'm not going to talk about that. That's fine. Kodak, that's one company. I'm not concerned about that. As anyone who's followed this channel for a long time knows, I'm all about the macro economy, because I think that is important and relevant to the overall sort of trends of this country. That's what I'm concerned about, really, is not necessarily the political implications, but I guess you could say the social implications, societal implications of the trends in our macro economy. And it, of course, is not at all unrelated to the riots that are going on, in my opinion. So what we've been seeing in recent months with everything going on are two pretty clear trends. We have been seeing gold rise steadily to where it is now at all-time highs in nominal terms. In terms of dollars, gold is more expensive than it's ever been. But this isn't exactly something that, as of yet, folks can be celebrating, and say, oh, well, I bought gold, I'm smart, unlike all these stock market people, because, the stock market has been reinflated successfully by the Fed this year, too. And so it actually makes sense that, the stock market and gold are rising together, because why is the stock market rising? As I've said over and over, it's because the Fed is printing money to drive up those stocks. Well, what's happening, or the reason why people would be buying gold, I'm not necessarily saying that what they think is correct, but the reason I would say that folks are moving into the gold market is because they're seeing how much money the Fed is printing, just like they did after 2008, mind you, and they're buying gold in anticipation of what? Higher consumer price inflation. Now, the CPI hasn't jumped yet, but what the price of gold is indicating is that the market believes that we will see inflation. And now also we're seeing the DXY, the dollar index, fall very sharply, very quickly. And the DXY is not an indicator of inflation necessarily. It's an indicator of foreign exchange markets, how much the dollar is worth relative to other currencies in the world, which is not the same as the prices you pay at the grocery store. Just the DXY can move up and down and not necessarily affect prices at the grocery store. But if we see a sustained move downwards, if there is a clear downward trend in the dollar index, in the dollar's value on the foreign exchange markets, what that means is that Americans, as a whole, are able to import less goods because our dollars are not worth as much, so we cannot buy as many goods from other countries. And so that relative scarcity leads to a rise in the cost of, or in the prices of, imported goods. And considering that the United States doesn't, make a whole lot of goods for ourselves, for our domestic market, that means that the price of most things that you buy at places like Walmart or on Amazon would go up if we do see a continued decline in the DXY. But assuming that this is perhaps a new normal and that the value of the dollar is slipping in a meaningful way in the foreign exchange markets, well then, once those price increases start to hit consumers, we're going to have more economic unrest, more social unrest, more rioting and things like that, because people will be made less comfortable. And I have to say, there are not enough voices out there tying what's going on in the streets, all of this rage and anger that people have, going all the way back to 2008, all of the increase in divisiveness in our politics, all of this, I think, has very clear, has clearly been fueled by our economic situation. Although I do remember back in 2016, there were some people tying the rise of Trump to the aftermath of 2008 and how a lot of people felt left out by the so-called recovery and the bailouts and things like that, to all of these major corporations and such, and of course the banks. But all of that has been done. What happened in 2008 has been done to such a greater degree this year with all this happening. So Trump can't very well claim that mantle anymore. But I don't think necessarily that all these people who are angry in the streets are really thinking about all of this in economic terms. I think that the economic strife of many Americans has just made them more irritable and more susceptible to this sort of these political divisions. Similar to how in Yugoslavia, in the wake of their economic crisis, they had the Yugoslav wars where they all fought over their ancient ethnic hatreds. The Yugoslav wars were not overtly about economics, but it seems like it's pretty hard to tell the story of the Yugoslav wars without starting with hey, the central government was bankrupted, and the entire political establishment needed some way to distract people from all the damage they had done. And so a lot of Yugoslav politicians decided to just, blame the people of other ethnicities in the country. The Serbs blamed the Croats, and the Croats blamed the Serbs, and and whatnot. And so all this news about gold and the dollar does not bode well for American society. It does not, it does not give me much hope for any sort of recovery in social cohesion, because these numbers would indicate that our phony economic system is finally starting to come unglued. And while I think that it would be very good to move away from our what I call a phony economic system, to where the Fed just props up asset prices and gets people to spend money that they don't have and borrow money that they know they can never pay back, that all this is not very good for society in the long run. And it is unquestionable that were all of this to come unraveled, it would create a tremendous amount of pain for people across this country, for just about everyone. And that our society would not be able to survive that. Our society has only endured this long because people haven't been able to feel the pain, because there's been this monetary heroin. Of course, had the Fed and the banking system and the financial system not gotten us into this mess so many decades ago, we wouldn't have this problem. But the fact of the matter is that once they had sort of made our bed, they could just put off us having to lie down for many years. It's a rather tortured analogy, but pretty much they've been kicking the can down the road. And as soon as the Fed either their foot falls off or they get tired of kicking the can down the road, when that happens, when the can stays put, we're going to come crumbling apart. And when I see the Fed's forecast that they're expecting about a 35% drop in GDP in the second quarter, when I see that, if that actually is the number that prints tomorrow when we get the official results, I do not see how we ever recover from that. I mean, I don't think there's ever been certainly there's never been a single quarter of negative 35% GDP growth, but I can't remember how much the economy fell in the Great Depression. I guess it was about 50% maybe. No, I just looked it up. It was only 30%. So if we have a 35% drop, and that's just in Q2, that's not counting the drop in Q1, which was by 5%. That was a decline in 5%. Of course, both of those are annualized rates. So actually, I should calm down a little bit. It is still an extremely awful number, but it's not as bad as the Great Depression yet. Because I believe that the way that the Fed number works is that actually, in order for the economy to actually crash 35%, we would need it to print 35% for 4 quarters in a row, because it is an annualized number. So while it fell at a rate of 35%, it did not actually fall by 35%, but certainly fell well over 10%. Sure, it fell over probably over 20%. I don't have a calculator in front of me, so I can't do the exact math in my head while I'm just sitting here. But I guess I'll finish by talking a little bit about the stock market, and that at this point, the stock market I don't think is really going to be a good indicator for me moving forward. I don't expect, if we've gone down this road, to where the dollar really is, if the dollar really is starting to lose value. And again, I'm skeptical because people thought this would happen in 2008, but if we're going down this road, you shouldn't expect stocks to take a hit for the most part, even though stocks are incredibly overvalued. Because if you look at the case of Venezuela, stocks kept going up. Stocks did fantastic in nominal terms. I don't necessarily know that that'll happen here. We might have stagflation like the 1970s, but what I do know is that nothing I'm seeing is going to be very good for ordinary people. As more and more people are negatively affected by all this, you're going to see things like the people being out in the streets, that becoming a more mainstream thing. And so I don't expect the rioting to really calm down as we get closer to the election. If anything, they're going to have more company out there because there's going to be more folks who are enraged by what's going on, even if they don't, again, fully think of it in these terms. Anger and resentment in general is something that I expect to rise across the United States. This is what happens when people are hungry, and I don't even just mean literally hungry. I mean figuratively, when there is greater scarcity than what they've become accustomed to. This is why after 2008 and the recession and all that, you started to see the Arab Spring popping up across the Middle East. Economic unrest leads to unrest within the entire society. And so I will be closely monitoring all of the data that I think is relevant, both economic and and news about what's going on with the unrest and things, and trying to really connect all of these dots to paint a broader picture. So if you get anything of value out of this video, I'd appreciate you clicking that like button.